Hello everyone. This video is part of an educational video series that I'm doing to show you some of these very powerful yet very simple concepts that we use in our technical trading. And this one is on symmetry, a very powerful concept. In fact, some of it's so simple I think people would be very surprised how well this works given the simplicity. But you know, one thing we've learned in life, sometimes simplicity is best, and that's definitely what this is. So let's get started here. I have some text here written, but basically, again, it's a very powerful tool. And what I've done here today is I've put together a bunch of very detailed educational charts. These charts are very detailed. They have a lot of written text annotations on them. So you may want to pause the video from time to time to actually read those comments. So again, symmetry is a very simple concept. Like I explained here, what you do is you notice the established trend, whether you're in an uptrend or a downtrend. Again, that's very easy to tell. You can see generally when a stock or individual market has put in a bottom. You note the trend, whether it's an uptrend or a downtrend. Then you observe the strength of the pullbacks in that trend. So if you're in an uptrend and your pullbacks were, let's say on a particular stock they were between $2 and $1.90. If you had a larger pullback on your next pullback that was much larger than these, let's say it was $3 or something, that would represent a break in symmetry. That would tell you with extremely high odds that the next rally would form a lower high. Why is that useful information? Well, think about it. Let's say you're holding a bunch of that, positions in that entity or the market. And if you knew with high odds that the next rally was going to form a lower high, you could know to exit those longs or short. The reverse, of course, works in a downtrend, noting the strength of the rallies in the downtrend. One of the beauties about symmetry, as I explain here, it's a universal function, okay? Which means it works across multiple time frames, monthly, weekly, daily, even intraday, 60-minute, 2-hour, even down to 1-minute charts. And it works across any instrument, whether it's a stock, ETFs, futures, currencies, doesn't matter. So it's a broad universal concept, which is great because it's not something that's curve fitted to a certain time frame or instrument. Okay, so the best thing is let's jump into the charts. So here's a very detailed chart example I have. This is a weekly view of the S&P 500. Today I'm going to go through a couple weekly S&P charts. I'm going to go over some daily charts on individual stocks, ETFs. I'm going to show you some intraday charts. So give you a nice variety. Again, what you could do is pause the audio and actually read a lot of these boxes, these text boxes, and try to absorb the information because there's a lot here. So let's to make this easy, on this particular chart, I'm going to pull up the annotations. So here's the annotator. Let's just move some of these lines off of here. So this makes it easy then, I think. So what you do is, you can see this is a weekly chart of the S&P 500. This is going back to early 2009. That's when that, horrible bear market ended. Now, before we get into symmetry, notice that we bottomed in March 2009 via another concept I'm going to discuss at another time, is this reversion to mean. You had a very low risk entry here. Notice how far price was below the 9-week EMA. Reversion to mean trades, tell you when things are too stretched. You're too far away from these short-term moving averages. You had a low risk long entry here, taking back 50% of this candle, which would have been triggered right here. Right around, looks like, it's hard to say exactly what level that is, around the 700 level. That was a great long entry, obviously. But that's not what this video is about. It's about symmetry. So in symmetry, as I stated, what you do is you note what your trend is at hand, which you can see after the March lows. You had a very strong rally up into the June time frame. Got pretty close to this 50-week moving average here. Then you had a really strong pullback. Or not that strong, but that was the strongest pullback so far in this uptrend. Before you just had little shallow pullbacks. So that pullback here, what you do is all right, all right, you're in an uptrend, you had a pullback, so you know the depth of the pullback. So then you could see the market then rallied again, and let's just take this line here. We just move it. You could see it had a nice pullback here, but this pullback was obviously shallower than this. So that tells you no break in symmetry. The trend is intact. You had a stronger pullback here. But notice this pullback was basically identical to the strength of this pullback. See that? So that meant, hey, there's no break in symmetry. The trend is still intact. In fact, they give you the exact low. And that's a lot of times with these symmetry, you'd be amazed at how many times your pullbacks or rallies are very almost identical to previous ones. So that ended up being a low. You rallied again. This got near the 200-week moving average there in green. This rally, though, told you that there was problems in place. You had negative divergence on your MACD. Your RSI indicators were sky high. Again, you had a hell of a rally off the lows. So a pullback was due. So we take this pullback, again, which is equal to this one, put it here. Then this pullback, you see how the pullback to here greatly exceeded this. So this pullback from this 1219 area to the 1040 low broke symmetry. It was larger than these two previous pullbacks. That's a break in symmetry. You can see my comments here. It says breaking symmetry, told you to expect a lower high, which we got here. Then you sold off, made another low. So why is that useful? Well, again, let's say you were still in long positions. You could have used that to exit those positions here, or even taken a short on the next rally. Symmetry doesn't tell you where the rally would stop, but it would tell you that to look for a lower high, which we got. That's very powerful information. Market pulled back again. Now here we formed a divergence. See, there was a little divergence. We bounced again. Now here, let me just remove these. You can see you had a rally here from 1040 to 11, it's 31. So then on your next rally, you know the strength of that bounce. Notice it rallied quite a bit higher. This was a break in symmetry to the long side. That told you, hey, look for a lower high. Market pulled back quite a bit, but notice it made a lower high here. That was a very low risk buying opportunity. Again, symmetry didn't tell you where it would stop, but just knowing the fact that you were going to form a lower high would have told you to be on the lookout for a trigger to go long. And you could see that provided a beautiful long trigger somewhere in here. Now you note this pullback in black from here to here. That's your next pullback to watch. So on these pullbacks, you can see there's a little pullback here. Well, that doesn't break this, right? No break in symmetry. Pullback from here to here. Notice how it met almost identical to this. So you didn't break your symmetry. You see that? Price rallied again. Now here you made a higher high, but some nice divergence was setting up in place. So things were telling you to be a little cautious here. Plus the time of year around late April. Market will sometime top around May time frame anyway. So regardless, you pulled off again. You can see what I'm using for this dotted line is simply, it's the same length as these. This pullback to this low here was quite a bit stronger than this. So it broke symmetry. That said, hey, you broke symmetry. Look out, the market will likely form a lower high in the next rally. You could use that to get out of longs or take a nice short, and you can see that's what happened. We formed a lower high here, then had a big sell-off into the August time frame. This was about over a 20% sell-off. That was a major correction at the time. Okay. So now you can see the first rally here to 1230. You can see note it here. Again, I simply take that rally to here from this low. By the way, that low had some divergence, you could see. Then that next rally to 1292 greatly exceeded this. So that said, hey, you broke symmetry. look for a higher low in the next pullback. That's what occurred here, then rally up. So you can see how the symmetry concept is, again, very simple. You're just looking at the trend, you're noting the strength of the pullbacks, and when you break that, the deep pullbacks, whether it's on a pullback, or for an uptrend or a bounce at a downtrend, it tells you if when that trend is over. And just knowing that if you're going to form a lower high or a higher low is very powerful information for trading. Because remember, trading, guys, you can scale into positions. So anyway, that's an example on a weekly chart here. Let's look at another one, since this is from 2009 to mid 2012. So let's take a look at the S&P from this time frame all the way to 2017, January now. So here's the S&P 500 from to the current time frame, 2017. So we were just talking about this time frame here, 2011 into this time frame. So remember, S&P had just rallied up, broke symmetry. We looked for a higher low, which we got here. When we look at all these pullbacks here, this pullback was identical to this pullback. This pullback, not identical, but it wasn't larger than these, so no break in symmetry here. It told you, despite these pullbacks, the trend was intact, and it was. Then the market launched this massive rally into 2013 and 14. You had pullbacks here, but you could see none of these were even close to being as deep as these. So no break in trends. They had a nice pullback here in late 2014, but even this pullback was basically equal to these, no break in symmetry. Then you had another rally to new highs into 2015. By the way, that's when we started getting a little bearish here because of the daily charts, but you could see what happened. Then the next pullback into 2015, this is a pretty nice pullback of around 12%. Notice how that pullback exceeded this. You see that? This was deeper than any of these pullbacks. That told you, hey, that trend's done for now. Look for a lower high. Market rallied almost back to the highs. You see that? But it still made a lower high. That would have given you a great opportunity if you still had a bunch of long positions to unload them here or enter S&P short. You can see the market then sold off, made a new low from here. So that was powerful. Then you note these two rallies. Notice this one, rally from here to here, broke this one. So we broke symmetry, you formed a lower high. So you can see how this worked all the way. Beautiful examples here. All right, guys, now let's move to, we'll just keep looking at some other examples. So now let's move down to a intraday chart. Here's a 2-hour view of the S&P. Again, I realize I'm just showing you S&P 500 charts for now, but remember, this works on anything. It could be an individual stock, ETF, it could be futures. So right now I'm just showing you S&P, but I will show you some other things. So here's a 2-hour view. By the way, this is back in 2016, during that pre-exit low. Remember that? Pre-exit was in June 2016. The market sold off. Market bottomed here in late June after the pre-exit. By the way, you had a beautiful reversion to mean low here off the dojis. But that's not what this is about. This is about symmetry. So you can see then the market had a big rally out of there. You can see it had established an uptrend. Moving averages were pointing up. Then you had a nice pullback, which again always occurs. Remember, the market stair steps. You're in a strong uptrend, you can have pullbacks. When you're in a strong downtrend, you're going to have bounces. So you pull back here. That you note the strength of that pullback, which is around 34.7 points. Rallied up. Then you get a pullback here. Well, clearly it's less than this, so no break in symmetry, right? You rally up and made another high. Now, market started going sideways. There was some warning signs here, obviously, but so then market pulled back from the highs at 36.75, which was quite a bit bigger than this. Break in symmetry. That said, hey, be on the lookout. The next low rally could form a lower high. That's what it did here. Formed a lower high at 21.87. Again, it got pretty close to these highs, but it formed a lower high. And then, boom, sold off. So again, very useful information. You could have got out of your longs or shorted. This pullback was 75 points. You can think of that as kind of another symmetry break. Clearly much bigger than this pullback, any of these. That said, hey, next rally likely to form a lower high, and that's what it did here. It rallied up quite a bit, but formed a lower high. So give a great shorting opportunity, and then you can see the market begin sort of a downtrend for a while. Here you formed a textbook bear triangle pattern. Triangle patterns are always 5 waves, A, B, C, D, E. This was bearishly labeled with wave E up there. And here you formed a bear flag. But again, nice example of symmetry on an intraday chart. Now let's move to another example. Here's a daily stock. This is actually an ETF, GDX. Here I got a lot of detailed text on this chart, so I suggest pausing the audio and just reading this, studying it. But let's go ahead and go over this. So GDX, this was something I was bullish on in early 2016, became bearish in late summer, early fall, and it became bullish here recently again. So here you can see the whole progression. So you had a low in January 2016. See this? Then you begin in a major uptrend. Obviously, once you rallied up into here, you seen there was a major uptrend. Your moving averages were pointing up. They were expanded out, bullishly configured. Then you get your first major pullback. Your pullback was $2.40. And notice you were over the 50-day moving average again. Then you rallied, formed another high. Then this pullback from here to here was $2.90. 50 cents higher than this. That's a clear break in symmetry. Said, hey, you broke symmetry. Look for the next rally bounce to form a lower high. That's what occurred right here. It formed a lower high. Very useful information. One could have shorted or exited GDX if you were long. Then you sold off, made another low. Now this pullback here, you can see how it came back to the 50-day moving average, the rising 50-day. Hadn't tested that in a long time, so a logical area for it to bounce off of. That's another technical thing, by the way. Whenever you're in a long trend and you haven't tested, say, the 50-day moving average in a long time, you'll at least bounce off of it, and here obviously we did. Now this pullback from this high to here was $4.20. A lot bigger than these. That represented your next major pullback to monitor, right? So then you hear your rally up, pullback. Clear, that's a small pullback. Then you rally up here into July, August. Here you form what is an obvious bearish pattern, rising wedge, negative divergence, MACD, RSI indicators. Rising wedges, by the way, are 5 waves. A, B, C, D. By the way, that should be E, not D. So anyway, broke down. But again, as far as symmetry, remember this was your largest pullback now in this uptrend. You can see this pullback of $6.60 was larger than that. That showed you, hey, symmetry was broken. So look for a lower high on the next bounce from here. Lo and behold, that's what occurred. Formed a lower high, allowed you to short or get out long if you were long. Notice the rally here, 3.5 points. Formed a bear flat, pin it, sold off, formed a bear flag. Notice how this rally of 340 was pretty damn close to this. So this is your next symmetry rallies to monitor. Sold off, made a new low, divergence on this low. Then we rallied into December into January, rally off the lows from here to here, 5 points. Now here you guys, you can actually see a real-time example of this. This is obviously a break in symmetry. It's much larger than these two previous bounce attempts. So why is that important? That tells me to be a buyer of GDX on the next good pullback. I went long GDX around here into this time frame. I've taken my profits. I'm looking to buy the next good pullback. And I have high degree of confidence because I see the symmetry break. So even though the symmetry break doesn't tell me how far GDX is going to pull back, when it's going to pull back, it tells me that it's going to form a higher low. And that gives me good confidence to look for a trigger. So, and remember guys, trading is a lot about confidence, emotion, etc. So just being able to answer things like that really is important. So there's a daily GDX. Now let's move to an individual stock. Here's JMEI. So now this chart has a lot of detail on it. This is actually for a different educational item called a moving average configuration and swing trading. That's really what this is about. This is for a different newsletter, but I do have a symmetry example on here. So just without getting into the other details in here, since we'll run out of time, you can see this stock was in a downtrend. It then based out in early 2015. You can see your moving averages also based out. Whenever they start pinching together, that tells you when your moves are going to occur. You then had a big move to the upside. Moving averages started expanding. That told you were starting an uptrend. You pull back. This pullback was $2.65. Rallied a new high. Pull back at $2.50. So you can see no break in symmetry. Then this pullback was less than these. Then from here to here, this pullback of $7.40 clearly was much larger than these. That said, hey, you broke symmetry. Look for the next rally to form a lower high that you can short or get out of your longs. And you can see that's what happened. It rallied up, formed a big lower high here, and sold off again. Lastly, let's move to some intraday charts. Just to show you this, again, works on even very short time frames. So here's a 5-minute view of the S&P. So you can see it's in a downtrend. Again, I realize many of you wouldn't maybe be trading this fast of a time frame, but that's not what this is about. This is just to show you that it is universal method on across any time frame or instrument. So you can see downtrend, this rally here, formed a bear flag of, it was $6.80, formed another low. By the way, that low was divergent, looked like it had a bear falling wedge, a bullish falling wedge pattern. Then rallied up 10 points. Well, this 10 point was clearly much larger than this. That said, hey, you broke symmetry. Look for the next pullback to form a lower high, and boom, that's what happened here. Again, that might not be a big move from here to here. Well, it's 10 points. That's a pretty nice trade intraday on just futures. So let's take a look at another example. Here's a 1-minute chart. Yes, a 1 minute. So here you can see this big sell-off into this day, June 27th. Bounce here was 4.5 points. Sold off, bounce here was 4.6 points. Now, you may say, hey, that's a break in symmetry. That's where a little of the art comes into place. You have to give a little room. So to me, 450 to 460 is basically identical. Then you sold off again. You had a divergent low here. So it told me to monitor a bounce. This bounce of 590, that is obviously a break in symmetry, right? That's much bigger than these two. Pullback formed a lower high. A higher low. You got a nice long entry down here, and boom, big rally into the close. So you see how that was powerful? After this, that told you to be on the lookout to buy futures on this pullback. And here's the last example, another 1-minute chart. This shows you the reverse at an uptrend. You're an uptrend, pullback 2 points. This pullback, $1.50, $1.50. Again, no break in symmetry. This pullback here, though, you can see already here, you had broken any of these, and it kept going. So clear break in symmetry here. Told you to look for a lower high, which you got, and a sell-off. So there you go, guys. Quite a long video, but I had a lot to cover. I hope this gives you a great education. That's what it was for. Talk to you later. Have a wonderful weekend.